Welcome to Online Trade Academy. This is Derek Zellick. Today I'd like to focus on a wonderful tool ATR, which stands for Average True Range. It's a phenomenal tool. It's a tool that helps us to understand volatility and also helps us to understand how I should use stops. So sometimes you decide or you think, well, should I trade this instrument? Should I trade Infosys? And the question becomes, well, I would often ask, are you ready to trade Infosys? Are you ready to absorb higher stops because of its higher volatility? And sometimes the trader doesn't understand that that's really what is required to do in order to trade something that moves with a higher degree of price movement. You have to absorb or allow yourself to basically have larger stops. And if you're not ready for that, then the answer is probably the person should not really trade these higher moving range stocks. So what ATR really is telling us what is the fluctuation and vibration of price movement. So on whether it's let's use daily charts for example. So if I go here to NIFTY, let's just take a look. Let me expand the chart here of NIFTY. And let me bring up, I have here right now stochastics, but let me bring up as well ATR here. And we have here the ATR actually in the new version of Trade Tiger. It's actually presented here. So let me just use this. I'm just going to apply it. Let me just remove stochastics for just a moment. And what you're going to see, we have obviously two lines here. We have ATR based on each individual day, and we also have an average true range, which is the red line. That tells us on average, and it's pointed out in the middle. Let me actually provide a data window so perhaps you could see a little bit better on the right hand side. You see the red numbers tells us that NIFTY moves on average right now 106 points per day to 108 points each and every day. And that would be between the high and the low of the day. So guess what? When you are trading, if you're a swing trader, you have to be ready to absorb that much of price movement as a stop, as a swing trader. Otherwise, you may get stopped out too soon. So take a look at this as an example. When we were basically pushing to an oversold territory, and if you're using any indicators, whether it's RSI or stochastics, to help you guide through overbought, oversold territories, you see when we get to this point, I'm looking on the right-hand chart of the chart, you can see that your stochastics tells us that it's an overbought territory. And so now I also can see here that my ATR at that time reads 76 points of movement. So what happens is, once you start to initiate a swing short, okay, and you say that you're expecting for price to move to the downside, what will happen is that by having a stop adjusted by 75 points up from your actual entry will help you to be eliminated from the whipsaws that actually do take place while you're in that positions, because your entry may not be as perfect, and ATR understanding that vibration will allow you to have not so perfect entry and yet still be in a trade and be able to profit from the trade. So ATR is a phenomenal tool. Start paying more attention to it and look into each individual script that you trade, and it tells you a lot of information to protect you. So I hope you've enjoyed this session. Thanks for watching, and I'll see you next time.